Okay, guys, I'm super excited. Finally, after so long, I'm leaving the house. Like, actually, further than one MRT station away. So, yes, we're gonna head over to Maureen's place and chat with her. Try to dig her head more a little bit about property investing. All right, so let's see what she has to say for all of us. Looking forward to it, and I hope you enjoy today's episode. So, yeah. Hey guys, the team at Blue Ocean Art is embarking on a blue chip art co-sharing project where you don't need a lot of capital, but you will be able to get a piece of the action in some of the leading art pieces in the market. The latest project will be spearheaded with this artist named Fang Li Jun, which has achieved auction records in the $7.5 million range. So if you're looking to diversify your portfolio, dip your toes in fine art investing, or just curious what's going on, head over to thefinancialcoconut.com/art. Link is in the description below. Wow, long day. I'm back in the studio, which kind of means my room. Pretty happy about today's episode. There's so much that Maureen has shared with us. I learned so much, and she answered some questions like, is property still a buy at this point in time? Some of the challenges with negative yielding property, which means like if you're servicing a property but you're actually losing money every month, what is the kind of risk that it's involved in peddling such kind of property. Of course, she also took some time to share with me and break down some of the ideas like buying property with no money down, or like selling one HDB to buy two, those kind of online stuff that all these people are trying to tell you. So I think I learned a lot today, and one of the most interesting point that she shared would be that maybe as a young individual, we should consider resale flat rather than a BTO. I never expected to be talking about that with her, but that is definitely something that blew my mind. So today's episode is value packed. Stay all the way to the end. I'm sure you will learn so much. Good morning, everyone. I welcome you to another day with the Financial Coconut. In our podcast, we'll be debunking financial myths, discovering best financial practices, discussing financial strategies that fits our unique life. You get it. Ultimately empowering us to create a life we love while managing our finances well. And today we have an interesting guest, someone I feel that could really give us real insights because of her experience in the property market. She built a cozy property umbrella in Australia and Singapore. She actually came to Singapore for a sabbatical. Like who comes to Singapore for a sabbatical? But she came. So, cool lady. Her clients are predominantly the high net worth space because this is the property market. So I'm not someone that is very understanding of the property space, and I definitely wanted her to come on to share with us so much more. And if you think about it, I think I got way more than what I was expecting. I found her on Facebook because she just creates so much interesting content on her Facebook page. So definitely check out her Facebook page. But before you head there, stay on and allow me to introduce you to the beautiful and knowledgeable Miss Maureen Lee.
Hello. This is all very strange for me. So.
Did I miss out anything?
Thank you.
Thanks for having us today. It's fun. You have beautiful place, two little dogs, so cute. So we are recording in the outdoor, a little bit of drizzling out there, a little bit of wind, a little bit of dog barking. So don't mind if you hear some cute little puppy squirts. And I think for a lot of our audience, right, they'll definitely be interested to understand why you choose Singapore. why of all places you live in Australia? The amount of people that tell me, I want to migrate to Australia. So why do you come here?
I think now, having lived here, I always answered this question like, maybe it's a moment of insanity. But back then, it was because I was keen to explore my heritage, being an Asian. I've grown up most of my life in Australia. I don't know what it's like to be an Asian, like understanding the language. I thought Singapore was a very safe landing place. It's very expat-friendly. They all speak English. And so I thought to stay here for a while. And then initially, it was really to stay for a couple of years. And then we just got stuck. So the roots started to get deeper and deeper, and then now there are dogs, there are houses, there are businesses and all this other stuff. So it's a little bit hard to now uproot myself.
Yes, so you have like actually been entrenched into the system.
Yes.
Yeah,
yes.
exactly what the government wants, right?
Oh,
like
yes.
just come in and then like build your stuff here and then like keep you here.
Yes.
Yeah.
And then I applied for the permanent residency after a couple of years, and I got it, and I'm here to stay.
It's so cool, right? And do you still go back often? Do you miss home?
I used to go back like 7 times per year, believe it or not.
Wow, that is like every other month.
Yes, indeed. When my parents were still alive. But these days, I haven't been back for like 3 years now. Yeah, so Singapore is kind of like the work home. I call it a work home.
Yeah. So when you call it a work home, does it mean like there's a lot of good work here? Do you feel like there's a lot of opportunity in Singapore? That's why you stay here.
Well, my space is in property, right? I mean, I was an investor in property and still is. And so if I compare like for like, I would say that Australia is probably a much better place in terms of return on investment, generally speaking. And the flexibility of the type of strategy that I can apply in Australia is just phenomenal. So Singapore, when I first arrived, it was like 21.3, ABSD, SSD just came in. I was thinking, gosh, nothing much I can do here. So we started in corporate housing, just to earn a little bit of income because I thought I don't want to dig into my nest egg. I want something that pays for my apartment, etc. So we started that. It's a cash flow exercise. So Singapore is not a natural place, but now looking back, right? I mean, especially where we're moving to now, as of this year, we're setting up our own VCC fund in Singapore. Things like that. We are doing joint venture with a lot of US funds and things like that. Singapore is a very good place. So I didn't plan it, but somehow destiny brought me here because if you look at Singapore as a place, it attracts a lot of high net worth. And it's the central port of Asia. And so from a branding perspective, from a company perspective, it's fantastic. But it was not planned that way. Yeah.
I'm sure it's like a lot of family offices here, a lot of big money here, right? So it's a great place. And that's why when people work in finance, they make very good money in Singapore, right? So I don't deny that. But I think for many people that are not in the financial space, right, or not in the property space, right, there's always this one looming question as still can buy or not, right? Property still can buy or not? Because it seems like, it seems like it is kind of inevitable that HDB is the first choice, right? It feels that way. Like I don't hear my friends or the listeners talk about like, hey, can I get a bungalow or can I buy a private property or even a condo, right? So this question has come up again and again in some of your live videos. So I just want to have you share with us a little bit. Like, do you think property still can buy?
I think we did a program in 3rd of August last year, 21.9. And I put up a chart, I recall, Reggie. And I said to them, can you plot? And this chart literally show you the whole economic cycle, like boom time, downtime or whatever. Literally, almost everybody in the classroom said that the next stage is going to be a downward cycle. So people know. And then if it's at the downward cycle, wouldn't it make sense to buy it just maybe after the downward rather than on the way down? And so at that time I recommended, please don't buy. So at this stage, they thought, we have had some equity reduction in the marketplace. There's some already very obvious sign that we're heading right into recession, if not depression. They are now asking me, so is this the right time? It's like, no, because it's still very, very uncertain right now. When you cannot see clearly where the bottom is, don't buy. You don't know what is happening in the marketplace. There's so many uncertainties. So the answer is do not buy. I say that, and then I had people say, but you're buying what? Which is fair enough. The reason why we're buying is because the segment the property that I'm interested in is 10 mil and above because we do fundings and all that, right? That segment hasn't had a lot of inquiries at all since the crash. Whereas the other end of the market, the more mom and pop, the usual people where they transact, that part is still different from the parts that I'm working at. And so the other thing is also when I buy undervalue, I do a lot of stuff to it. It's my business. I do enhancement, I do development. So it increase the value. I do sexy stuff to it. But if you're just buying and hold, no, please don't.
So what are some of these things that people that are buying and you think it's like, no?
Typically, there are only two segments that Singaporean, especially those interested in property space, are buying. One is obviously condominium. We're not talking about obviously for own stay, which is then HDB would be one of them. But if it's for investment, generally it's condo. And lately, especially as of late last year, is industrial properties, right?
Okay, yeah.
And we know.
Yeah, I've heard that. I've heard that.
Yeah. So these are the two major segments that people are playing in, so to speak. So still no.
Still a big no. So for
No.
all of you guys who are hoping that you tune in today and suddenly get some strategy, I'm sorry. Yeah, we got to wait a little longer.
Yeah, I said wait and then give me some time. I will hint to you when it's like the right time. I'll say, hey, this is the right time now, go out and get something. And we have discussed it among my team also what else to buy when the market turns. So like with everything else in life, it's good to be prepared, right?
Yes.
So this is the good time to window shop, but do not buy.
So given such an environment, like you are kind of waiting for the dip, right? Waiting for the time to go into. And do you want to kind of just share with us a little bit, like where would you be looking at?
It's not so much specifically where, it's the entry price. And generally, I have a favorite place, which is the outside city outskirt. So, like for example, your Sims area, your Queenstown. So, not the central city area. I would not buy around there. I would also not buy around the, too far out there, like Woodland and all that right now for investment.
Yeah.
Don't mind living there, but for investment. The only exception to the rule is Jurong. Even though Jurong is considered more supposedly outskirts, but its behavior is more towards the mid portion. Mid portion is good because you catch both ends. That's generally where the mass market people who want to rent, they get best value of money. They still get close to MRT. It's still about 5 to 7 stops away from the CBD. That's the sweet spot. And then beyond that, it's all about entry price.
It's all about valuations,
Yeah.
right?
All about it.
So yes, you guys heard it, right? This is like trade secret. But yeah, so I think in a lot of investments, right, it is beyond just valuation. There are things like cash flow, right? Things like rental yield that
Very
you
important.
look at, right? So
Yeah.
in the equity space, we look at dividend, we look at the kind of leverage that we need to put in, and fundamentals of the stock, right? So in your space, what do you actually look at? Like, what are some of these factors beyond just valuating?
First is it has to be undervalued. There's no question about it, because if you bought, the majority of the profit is made when you buy. It's not when you sell. And that's consistent even for me. So whenever I go to all the funds trying to raise funds, right, from institution, they always ask me, what price do you buy it at? They want to see that there's a gap between what the normal market is and what you're buying it. So I'm sure it's the same in the equity market, although I'm not an expert at all in there. Then the other thing is that you want to buy in growth area. So where there's still gentrification, there's still potential where the market demand would somehow push the property forward. It can be segment or category, or it can be based on the area itself, right? For example, Little India or the Aljunied area are more the gentrification type suburb. It used to be Tiong Bahru, but now it's already very matured, just to give people some perspective, right? But it can be also category focused. Category meaning usage-wise, what you use it for, etc. Then the next thing is that it has to be positive cash flow. And
Elaborate for us. Yes.
That means that after when the simple concept is this: when I buy this, after all my possible expenses, the MCST, the loan, the government, whatever else, all subtracted, it has to give me at least some money in the pocket. I don't care, especially given Singapore marketplace before pre-COVID time, I would say, the capital is, so it's quite at the how should I say, the pricing in Singapore market is not at a discount, generally.
Yes.
Therefore, at that stage, the yield majority of the time is negative. So if you look at our home loan rate, it's about 2%, 2.5, something like that, right? The rental yield sitting in Singapore at that time was 3 less, So you just do your simple maths, 3, and then your cost is so high, and then plus you've got other costs, you know that you have to top up.
Yes.
The only thing subliminally insulating the Singapore public from knowing this is because of something called CPF top up.
Okay.
So because every month you actually need to top up money, but because it comes up from your CPF, it didn't affect my lifestyle, so I'm still continuing. But reality is, I asked you, Reggie, would you start a business investing $200,000-$300,000 and then not make money and still have to top up every month?
No, man, it's crazy.
And
right?
has been happening in Singapore market for a long, long time.
Wow.
Our resi market.
Wow, and that's for you guys, man. You heard it, right? It's definitely challenging when you are in such an environment, right, where you are negative yielding, and in any case, something happens and you need to kind of pay up for it, and you cannot afford, then you become a distressed property.
Correct.
Right.
Because if we go back to the father of all these like passive income, and all that being Robert Kiyosaki, right? He talks about like passive income giving you freedom and what is an asset. Well, that's really not an asset at all. It's detracting you from your retirement, because the moment you lose your job, you can't fund this property. So then you are stuck as a slave inside this. Now, there's only one instances where this kind of strategy works, where you top up, you still want to buy. It's when the growth, the capital gain for your property far outweighs what you have to top up. So for example, every year I have to top up, let's say $3,000 just to support this property, because what my tenant pay me is not enough to cover the cost. But I know that the market is going upward swing, and I'm getting capital gain of $100,000 to $200,000 per annum. Of course I'll do it. Makes sense, right?
Yes.
But that's not the market we've been operating in. So
when was the last time you saw something like that?
before 21.3 in Singapore.
Wow.
So anyone who bought before 21.3 got it good.
Okay.
Post that very hard.
Okay. And you were just talking about Robert Kiyosaki, right? So he's one of those guys that is like super contentious. Whenever you throw out his name, right, it's like, so which side are you on, right?
Yeah.
There are, he's quite synonymous with the whole like seminar circuit.
Correct.
Right? The
Correct.
people that
Correct.
appear in your Facebook,
Correct.
appear in your
Correct.
YouTube, disturbing you,
Correct.
and trying to sell you something, right? So,
Correct.
I'm sure you've come across some of these videos and some of the strategies that they talk about. Things like, no money down, property no money down, or like sell your HDB and get 2 private property. So do you kind of want to help us address some of these? I hope we don't get you into trouble. Yes.
Well, getting the no money down, I think, is no longer a secret. I mean, it used to be a secret when they
It's all over Facebook now.
Correct. I mean, they all know that it's now like a bit of a crowdfunding exercise. I get all my friends involved, and then I'm the one who operate the building. So I have it no money down, but not my friends. They all had to put in something. The issue is all coming down to this. The contentious thing is about this. Let's say if I'm on $3,000 income per month, and generally if I've just graduated, that could be the salary I'm on. If I own a couple of these, so I didn't put in any capital. I got all my friends involved. I rented out. Supposedly, it's supposed to be positive cash flow if it's tenanted. That was the assumption. But let's say if it wasn't tenanted for any reason, like a few months,
Now.
Yeah, and I have quite a few of this, and I'm on $3,000+ income, which is not a lot when you're considering the mortgages for most of these. It's dire, the situation, and that is what people will be confronted with.
Yes, and essentially that is what, for like a better way to put it, they don't tell you. Right, when they sell you the course, they only show you the beautiful side, all right. And But the reality in all investments is that we need to hedge the down, right? We need to be cognizant about what is the downside.
Correct,
Right?
correct.
And this is exactly the downside that we've been talking about again and again when you're highly leveraged and you cannot afford.
Correct. I do want to say though that if I was like a young niece, right? I call it young niece who went through one of these courses, it would definitely add value to my knowledge about, because they debunk a lot of the mystery about how to get loans, so there are value to the course itself. But the strategy, the risk side of it, needs to be emphasized. Because really you can easily face bankruptcy and that kind of issue. But what it does teach about how to get loans, how to, those are valuable.
Okay, so I get what you're saying, but I come from the grounds that $3,000 should get me a lot more information. You know what I mean? Like I would be happy to pay $30 for a book, something like for whatever you just talk about, like how to get loans and how property investments are actually structured.
Yes.
Right? That for a book, more than happy to do that, right? Or sign up for a podcast, more than happy to do that.
Right.
But to sell me this idea, right, that this is a tested, proven system, right? You just sign up for this, you're gonna make money, and charge me $3,000. I'm not comfortable, and you don't need to respond for this.
No, that's okay. I would say this. You asked me before about the different things one would do to extract profit out of a property. The thing is that to extract extraordinary yield out of a property, even in the markets that we're in, you need to treat property like a business. It's no longer a passive thing that I do on the side, buy and hold. This is not the market. So for those people that they're teaching, the missing link is how do I then operate this property that I bought in a business format so that it's extracting me income. And that part is unfortunately not taught. Yeah.
And I would kind of add on to that to say that they don't know.
Yeah.
A lot of them don't know, right? So it's like whatever they say, it's the interesting part is whatever they say is not wrong.
Yeah.
It's just not whole.
Yes.
Right? And for someone like yourself that has done the dirty work, right? From ground up, revamping property after property and then doing all the development work, and you see so much more.
Correct.
Right? Compared to people that just, for like a better way to put it, some of them are even learning from someone else and they just repackage the course and they just sell it to you and then tell you that's proven.
Correct. And it takes skills. And also the other thing is also that there are risks. There's no guarantee. There's no guarantee that the whole thing will be full unless you have done this multiple times and you know how to enhance the property, you know how to extract yield. It's like a business. Yeah. So that part, unfortunately,
it's just not talked about.
It's not talked about, yeah.
For like a better way to put it, those are the real trade secrets that people in the trade are either too occupied to share with you or you're just not connected enough, right, to understand these things.
Correct.
And that's what I tell people again and again. It's like your biggest opportunity would probably be closer to you than you think.
Correct.
Right, because you're deep in the sector.
Correct.
Right?
Correct.
So it's like if you're an accountant, every day you see a lot of accountants very jaded, right? Then okay, that is an opportunity. How do you solve that jadedness?
Correct.
Right?
Correct.
And not jump into the property market.
Correct. And I think that because I think people are generally trying to find ways to earn more income with minimal capital and they want guarantee and they want low barrier of entry, then this become a very natural tendency. So then people paddle out things like co-living, how do you do that, which is what you alluded to with the rent-to-rent strategy. There are also risks involved with that, which is why as a company we never enter into it. I always say to the people within my mastermind, if you own the property, go ahead, do co-living because you own it. There's capital upside to it. You are paying off your own loan and that capital upside is worth something. Don't go out and rent where you have monthly commitment. The landlord doesn't care if your place is leased out or not. And then plus you've put in deposit, you need to renovate the place. There are damages definitely done to the place, right? And so if you have like 4 rooms co-living, one is not leased out, which is going to be very common, especially now in this current market, you could be either in break even, if not making a loss. Then again,
Which is exactly what is some of the investors are talking about with WeWork. Exactly what they do, right? But maybe at a much grander scale, right? They rent longer. Of course, some of the properties they buy, but for a lot of properties out there, they're actually renting to rent,
correct.
right? And I don't know but if let's say that is not a valid strategy, right? Then for young people like myself, mid-20s, early 30s, what can we do, right? If we are really vested in the property space and we really want to do something in property, I don't know why but if we really want if you've never done anything in property, why would you be super vested, right? Probably some ideology that's been peddled again, right? But if let's say people really are interested in the property space, for someone that is time rich, cash poor, what can we do? I hope you're enjoying so far. Maureen will be back with us after a break and a word from our sponsor. Good day, guys. I get it. Many of us want to learn how to invest. Secretly, we may even believe we can do better than the financial planner. But probably the real issue is the distrust we had with financial professionals. We're not sure about their biases or their intentions. How about trying out a robot? No feelings there. Getting the job done in a relatively objective way. Try out Stashaway today, one of the leading robo-advisors in Singapore and Malaysia. Check it out at thefinancialcoconut.com/stashaway to get 50% off your fees for 6 months. Get started on your investment journey in a simple, fuss-free manner. Link is in the description below. If let's say people really are interested in the property space, for someone that is time rich, cash poor, what can we do?
Okay, this is the part that we need to get very, very real, right? There are 2 ways that you make money out of property. One is your rental yield, and one is your capital gain. Rental yield is absolutely necessary to give you the holding power and hopefully in the right market element, give you some pocket money. But if you're talking about passive income, retirement, you need a lot of this property in order to put you into that space. And Singapore hasn't been in that market cycle that you can do this. Unless you do it like a business, and even then there are inherent risks, I'm telling you, with it, which we do it as a business, and I'm telling you that because we do it as a business, we're professional, we know the risks. And I can't even say that, hey, so come in newbies and do that. So I would not recommend that. But what is very real is that property is a very good place to accumulate wealth. There is no other, or in my limited knowledge, there's no other things which I like. The things I like about property is that I could put in, let's say, $200,000 into a property. In the right market, assuming I buy well, suddenly I could find myself 1 or 1.5 years' time having profit, or in Australia, I can get like $400,000 or $200,000 profit in the right market, assuming I buy well, which will take me forever as a young person earning my income to accumulate that kind of equity. But that equity is my nest egg. It's worth a lot of money. And if I have multiple of this nest egg, can you imagine?
Yes.
So that is what I wanted the young people to know, that that's what you should be accumulating. That equity is worth something. But do not use property as a vehicle in Singapore, for now anyway, as a way to generate income. Unless you're professional, don't.
Cool, I get that. So essentially, that is the power of leverage, right? Because mortgage loans are so much cheaper, right? Because for some reason, the banks value property as a decent asset, to back the loans. So broadly speaking, across all the asset classes, when you use property to make loans, it's much cheaper.
Yes.
Right, and that's why you can potentially ride that capital gain.
Correct.
If there is that
Correct.
movement, right?
Correct. And the thing that I like about property for my purpose is that it will never become zero in Singapore, because you can't like from one day find out, oh my gosh, it's like I invested 200, it's all gone. It's there, you can touch it. It's just, it might go through temporary correction, or even if you buy badly, you might, meaning really badly, you might sell it at a loss. But there is still money in there. It doesn't disappear. And so that's why I think that's how I would do it. And so if I don't know if you are okay if I touch on this topic. So if I was a Singaporean in my early 20s, I would use other format to accumulate my cash flow, my day job, my other things. But I would use property to accumulate my equity for this market, right? And given that you might say to me, hey, Maureen, I just say that you say don't buy, blah, blah, blah. It's true. But and this is the part that I actually, I'm different from Robert Kiyosaki. He said the house you lived in is not an asset. It's not an asset in that it doesn't give you income. Totally agree. But it can in some rental format. But it does give you equity. And equity is a beautiful thing. Why is it that majority of the wealthy people park their money into property? Is because of equity. They want the sudden acceleration of their wealth from only put in 200,000, suddenly it's worth that part.
Yes. For like a better way to put it, there will never be another Orchard Road.
Yes.
Right? There will never be another Marina Bay Sands.
Correct.
Right? So when you get it at a good price, at a good time, best if you got some inside deal, get some de-stressed.
Yes.
But that is complex.
Yes.
Right? And if you're there, and it's always there.
Yes.
Right? And you have it. Right?
Yes. And it does, when you go through the upward swing, I mean, my very first property, and this happened in Singapore as well. I bought a set of property for $400,000. I sold it in 18 months' time for $800,000.
Oh.
I was in my early 20s. There's no way I could accumulate. I was running my own business and it was generating good income. But for me to accumulate $400,000, it would take me forever.
I get it. I totally get it.
It would take me forever. But yet, with that, it gave me an in. And then I was thinking to myself, Reggie, like, oh, how many of this can I own?
Yes.
Right? How many
Yes.
400,000 can I make? Because that will put me into a position where I can retire.
Yes.
Right?
And that is definitely one of the concerns from people when they are trying to invest.
Correct.
Right? The general narrative out there is so that you can retire. Right? Of course, I do beg to differ in terms of like what you can do with all the wealth, right? But I agree with your strategy. I agree with what you said, that I think to sum up whatever you just said, for all of you who are following, is that we don't want to see property in Singapore as a cash generator, because the risk is crazy and the upside is limited, right? But we want to see the property landscape in Singapore as a way to get equity into the space.
Correct.
So that we can then use that comfortable leverage, because it's relatively cheap, to then make that upside in a good time.
Correct.
Right, okay.
So assuming that, and Reggie's assuming that I'm in my early 20s, I'm a Singaporean, right? So now I know that, and I think I said that to you before, that I really empathize with your generation. Because even a one-bedroom apartment in Singapore right now is like 800 to $1 million. So I need to put in like 200. And assuming no parental help, it would take me like, assuming I'm on very good income, accumulation over at least 5 years to get that kind of, and that's assuming I'm on very, very good income. And to get a dodgy little small box, right, to live in with my partner. So that's not the way to go. If I was a young person, and I recall my right-hand lady actually asked me that question, she didn't come from a very good background as well, normal background. Just normal. Parents are also living in HDB, cannot help her. So she got married. She asked me, hey, how can I ever be in that position, right? So I said to her, if I was you, and that was only August, and this strategy is still applicable today, this is what I'll do. If I'm getting married, and unfortunately you have to get married in Singapore to get HDB, so find a partner somehow. And the thing is that I would get a resale HDB.
Okay.
not the new BTO, whatever. And she was shocked. She said, hey, but people are always telling me I should get the BTO, newlywed, wait for the whatever. I said, but resale HDB, the barrier of entry, the amount of deposit you need to put, given what the government, is so little, right? So if I, let's say, get somewhere around Punggol, Sengkang area, right? Good area, get a 4-room, right, HDB, live close to my parents, which is her case. I get all the government subsidy because I'm living close to my parents, and it works out to be a substantial amount. I think it was like 80 or something like that, 80,000. Long time ago we looked at this. 80,000 for youngies, 20, again, take forever to accumulate, right? Get into the game, 4-room, grind it out. First, of course, with the HDB, with the CPF top-up, literally the amount I have to pay monthly is very minuscule. Continue to build my career, save up my money. If I wanted to, if I'm a little bit more grid-focused, lease out one of my room, right? I've got my wife, there's 2 of us, lease out another room, cash flow, come in. Live that out over the MOP period, 4-5 years. By then, we calculated majority of that property would have been nearly paid off. Wow. Right? And so you come to a position, and plus your savings, your renters' money, assuming that you're a very good saver, all coming in. And you know what the beautiful part is? If you do that strategy, you still have a lifestyle with your wife, versus if you were to get in a condo. And the why I'm not against, but I don't think BTO provide the same strategy is because you cannot get in immediately. You have to wait.
Yeah, exactly. Like, what you said, a lot of people don't understand that. Time is a very important factor in investing, right? It's not a speed game, it is a time game. So coming into resale, even I didn't see that, right? It's like I consciously know that this is a thing, but I didn't see that.
Yeah, and the grant for BTO is not as good as resale. And then the other thing is also you don't have the advantage of time to lease it out to someone to collect the extra income. And your MOP period is also, like it's quicker that you can then exit, take the equity that you've, accumulated and then exit. So I was just sharing with someone, my right-hand lady, that this is the time. If you enter 4 years later or 5 years later after your MOP, this is the right time to sell one, buy two, not now. And that is the time that prices would still be okay. You get into 2 condos. By then, given the market correction, rental yield would be decent again. And that's you when you accumulate some cash flow, or at least some positive cash flow. I don't care if it's break even, as long as it gives you don't have to top up, is basically what I'm saying. And then you can accumulate the equity. And then so imagine late 20s, would you or would you not be happy if you end up owning 2 condos?
Oh, I'll be glad. I'll be running around.
Yeah,
exactly.
And then how about all the times ahead of you that you can still accumulate more with your 2 condos?
Okay, so what I'm getting is that there is actually validity in the buy one, like sell one, buy 2. It's just that at this point in time, it is not right.
Correct.
Okay.
And that was trashed out in the marketplace for very clearly reason, commissions.
Okay,
you sell one HDB,
yeah.
you buy 2, how much commission do I earn?
3 properties. Right. Okay, I see it. Now I see why it's being peddled. I was like, why are this property agent telling me to sell my HDB to buy 2 condo?
But they were riding on the fact that government just announced the HDB, that it's not guaranteed that they'll buy you out and all that. So they were leveraging on that to write their strategy. But actually, it's because of it's all coming back to money again.
Yeah, which is why I always talk about understanding the interests of different parties, right? You need to know who is incentivized to do what, and then you kind of get more informed of their recommendations.
Right.
So, wow, I just never spent enough time in the property space to be so vivid about it. Right?
And to be honest, also for a lot of property owners who own HDB, it's seen as a status thing as well. Like, now I'm owning 2 condos and I'm living in 1. It sounds good. So it's very easy to convince people.
Yeah, now I see it.
Yeah.
So scary, right? In some ways, when you look at it, it is essentially playing on all the kind of social nuances that people have.
Yeah.
Right? So it's playing into your narrative, into the tune that you are sold.
Correct.
But actually, once again, not a full story.
Correct.
Right?
And the other thing is that you notice a lot of them are bringing these sell one buy two to new launches. Why? The commission is much better in new launches than it is in resale. Resale, you get what, 1%, 2%, and you have to share with the co-broke. New launches at that time, given the 50 plus launches that was happening, developer was paying very high percentage.
Is it okay to say how many percent?
I saw one time like it was even close to 5 for some.
Wow, that is a lot, right? It's
And there are higher ones as well, but those are the rare cases. Yeah.
Wow.
So if you're earning that, wow, why not?
Wow, you suddenly become so rich.
Yeah.
Right? It's property really sounds like a place.
Yeah, if you're an agent.
Yeah.
Yeah.
Wow. Oh. Wow, I'm blown. I always thought it was 1% to 2%. I didn't realize that new launches have that. And is it because at the point in time of new launch, a lot of the properties developer are still raising funds, and that's why they're giving out so much?
Or rather that the demand is less than the supply. You have 50 plus launches. There's only so many Singaporean, and plus all the ABSD and stuff. The government has already put a cap on how many that you can buy. So with the limited pool of buyer, they have to snatch them. And what's the best way? Agents. Pay them more. They'll bring them in.
Wow. It's so blunt, but so real. Right?
Yeah.
And well, that is definitely what I want to hear, and I'm sure my audience want to hear that
And
too.
mind you, I also have to say I'm very balanced. There are good agents out there. There are the ones who, whatever recommend you, it makes sense. I work with some of them, right? But then majority are not like that.
Yeah. So that is actually one question that people ask me a lot. How do I choose the right managers?
Agents,
Yeah,
right?
yeah, essentially. Right.
I never choose them for their talking skill. Never. Because I find that, hey, I know the price I want to get in. I know how to negotiate, maybe because I have those skill set. What I always get them for is their ability to research. Very important. They can give me the most up-to-date data and information about a property, which would then feed into my template so that I can analyze whatever I want, work out how much and whatever. Then I will tell them, okay, this is the one that I wanted. And the good, the smart one, the 10 out of 10 one, they will shortlist for you. They'll say, okay, based on your criteria, you want something with good rental. These are the ones that I shortlist for you. And they'll present it. But you have to be discerning. You need to know what people are motivated by and take their information with some caution as to the fact of what motivates them, and then evaluate yourself.
Which fundamentally brings us back to incentives.
Yes.
Right? How are they incentivized? And,
Correct.
Sadly, it is a transaction business.
Correct.
So, we fall prey to,
Correct.
excessive transactions.
Correct. But I think that the good agents really then start to realize that, hey, if I serve this client well, nothing better than referral.
Yes.
And then they stick with you forever. There was like now when I buy property, residential property, I only work with one agent. In my commercial space, I only work with one agent. And both have similar traits, but they all specialize in their area. They give me information. I don't need anything else.
So should we work with specialists? Like some
Definitely.
agents, they sell all sorts of properties, right? Or
Yeah.
actually, they don't really sell all sorts. Like just all sorts of chapalang deals come to them, and then they find their friend, that kind. So, do you recommend that we only work with professionals? Like they are very focused in like condos or like industrial or,
Yes, definitely,
something?
definitely.
Yeah.
And then if you talk about classification, definitely. Areas wise, the for example, the one residential agent that I use, he works all over Singapore, but his research is good, solid, and he's not a talker, much of a talker, but he is very good with his research. He's more up to date than I am in the residential space. So I'll ask him, he'll say, oh no, this is the situation. But I just need the information. Then I can work out my decision. So I think that's very important.
And fundamentally, you have a system that you work with.
Correct.
Right? And we probably don't have enough time to cover that today. But in the future, if you want to organize something, for our listeners, and definitely let us know. I think a lot of people will benefit from it, right? But I know it's difficult to share, everything at one time, right? So let's take it step by step. I don't want to be squeezing everything out, but I'm quite sure we will meet again. We will definitely chat again and, get more from you. But beyond property, right? So this is something I like to ask for a lot of specialists, right? People that are super good in their field. After a while, you realize that it is not all about property, right? There are some elements to life beyond property, right? So for our young listeners, out there, they're still trying to shape the life they love. What are some random advice that you can give, the 20-year-old?
Random advice to give to a 20-year. So if I have it all over again, I would say I value time differently now that I can look back. I realize the importance of compounding interest and compounding effect of accumulation of wealth. I want to get into the market. But I also recognize that a lot of the right strategy, just as with life, if you read all the biographies of like successful people, whether it's Mr. Lee Kuan Yew or all the others, their life is very systematic, almost boring, but very disciplined. Every morning they wake up like this, they do this, like Mr. Lee Ka saying, wake up at this time, always play golf, and then doing this. Same ritual and routine. Is the consistency that is the result. It's not the sexiness of, whoa, tomorrow I get 300% and all that. Those are your play money, meaning I can afford to lose it and not cry about it. I put aside a little after I've got my castle and my foundation solid. I've got this amount of play money. If I make money, I make money. If I lose it, I'm not going to cry about it. So I always say, there's two different types of people who drive Ferrari, for example. The ones that if you scratch his car, he will not eat for the rest of the day because it's all that he can afford, Or the ones that who has so many cars, it's just one car, right? It's not so important to them. So being very detached. And so that's how you should look at that little money that you want to do the 200%. And that 200% seldom happens. The only time that you can get the amazing profit in anything, I believe, although I'm not an equity expert at all, is if you play it like the professional. You play it like the professional. I run my property like a business. And that's why I can get like 20-30% per annum. And when people hear about what I do, they like my after story. Reggie, they always like, wow, she got $5 yield out B1, blah, blah, blah. The process, they hate it. They would be like going through the roller coaster going. But when I'm going through it, I know about my own capability. I know what I can do. But for them, it would be like so horrendous. Like, oh my God, whatever. So that's what I say to them. Don't do that. Unless you intend to do it as a business, don't do that.
Wow, this is exactly what I experienced, right? When people ask like, hey, how do you learn to pick stocks in the market? Then I'll be like, you sure you want to learn? You just want to make the money, right? You just want to make the profits. You want to make profits that we make.
Correct.
Right? But after I show you the system, how we do it, the kind of grinding work that needs to be done day in, day out, and waiting and planning, and that is the crazy stuff.
Correct. And the thing is that I'm sure, Reggie, in your cycle of investment, there are times that you grip onto your chair. You are sick in your stomach because you've just confronted a situation you've never confronted before. But through sleepless night, through research, through grind, you get through it. And then that makes you a different level of investor after that.
Exactly, right. It's exactly like what you just said. Like recently, I just went through the biggest crash of the market, right? And I'm like, wow, for that 2 weeks, I'm like, 我不要再 invest 了. I want to quit this thing. It's so tiring. Right? It's like, because a lot of things you're talked to about, right? And you're mentally prepared. Or you think you're mentally prepared until it really happens. Until it really hits your door, 10%
Correct.
down, 10% up every day. And I'm like, what the hell is going on?
Got it. But that's what makes you who you are. Like then people will go, oh, my friend Reggie makes this kind of return. they want your return. They brag about your results, but they were never,
Yeah.
you know. And in that, you cannot, you have to write through it.
Exactly.
Yeah,
So-
you have to write through it. And the thing is that one thing, if they just learn this, whatever that they want in life, if they can just learn discipline. Discipline is a very boring thing. It takes a lot of grit sometimes. It's mundane. A lot of the time, you can't see the results when you're doing it. You're like thinking, I'm crazy, I'm still doing this. It brings me pain. I can't see the results. But that is the thing that will separate you from the crowd.
Nice.
That is so important.
That is so real and that is so truthful. When you repeat, and repeat, sometimes you don't see it, but when you take a step back, you're like, actually, there is a lot of growth,
Yeah,
right? And I think that is beautiful.
yeah.
Thanks. Thank you. Thanks for sharing. It's a great time with you today, with your lovely dogs and lovely place. I know you guys cannot see because it's a podcast, man, right? In the
Thanks for
future,
having me.
yeah, we'll do some videos and let's see where this brings us, right? Thank you. Thank you for today.
Thanks for having me. Thank you.
Hey, I hope you learned something useful today and truly appreciate that you took time off to better your life with the financial coconut. Knowledge is that much more powerful and interesting when shared, debated, and discussed. I hope you would share what you gain with people you love, and I want to hear from you. Give me some questions and help me along with building a community of financially savvy coconuts. Together, I hope we can fulfill our curious minds and our desire for clarity. Join our community Telegram group, reach out to us on Facebook. Everything is in the description below. If you enjoy our podcast and feel you want to keep us growing and stay independent, do buy us a Ko-fi at ko-fi.com. With that, have a great day ahead, stay tuned next week, and always remember, personal finance can be chill, clear, and sustainable for all. Test. Okay. I hope you guys enjoyed today's episode. It was really fun talking to Maureen actually and playing with her little dogs. We had a lot of interesting happenings in between during recording, and she wasn't actually an easy guest to get. We had to go through another friend to connect with her to then, go through the process and then finally got her on the show. So that's fun. But after our discussion, we're actually in the midst of trying to cement the whole property show with her. So that's great news for all of us. Just recording now, it's a little bit of a problem because of this whole COVID situation. But as soon as recording is easier to handle, we will be producing that show with her. So yay! Everyone will get to learn more about property, and we're gonna cement the whole season. It'll be a seasonal show. We're gonna cement the whole season around owning your first property. Essentially is that 12th episode that if you want to buy your first property, you can listen this 12 episodes, you get a much stronger base to then interact with all the people that you need to interact in the process. So it's gonna be fun, and stay tuned for that. Meanwhile, next week we're gonna talk a little bit about diversification. It is one of those mantra that all these gurus out there they use, right? Or even your financial professionals, they always diversify. But is it always the best to diversify? What are some of these scenarios where diversification fails you? Or do you actually understand what you're diversifying into? Right, so these are some of the little things that we will be talking about in next week's episode, and yeah, man, it's gonna be good because not many people actually break down to you what are some scenarios where you actually think you're diversifying, but maybe you're not, and it goes against the fundamental of diversification. So yes, that will be what's happening next week, and we are in the midst of upgrading our website, improving our socials. So if you have not followed us on Instagram, okay, finally, I'm clearly not an Instagram person, but we have a small team now managing our website and our socials. So join us on Instagram. Check us out at The Financial Coconut on Instagram, yo! Come on Instagram, talk to us, give us some questions, and yeah, we'll be happy to connect with you on Instagram, because I think some people feedback to us, say Telegram, it's a bit messy. So come to Instagram, ask your private questions, DM us, and yeah, we seek to be there for you, walking with you in this path. So yeah, have a great day, happy National Day, and see you next week. Bye!